Hello, everyone. My name is Jeremy Clark of CH Financial here in beautiful downtown Calgary, joined by my colleague, the CFO of CH Financial, Stephanie Murray,
Hello.
and one of our great partners that we work with from KMSS, Mr. Mark Servello, will be joining us in a minute as well. CH is a holistic integrated financial planning firm, independently owned and operated. We've been in Calgary for over 30 years, and we provide a lot of integrated financial services for clients, such as tax work, investments, insurance, business planning, estate planning, intergenerational planning. And we've been doing that for a number of years. We deal with all sorts of different clients, and that's what makes this job really interesting and exciting. Certainly for us, for the team, and I think for our clients as well. And KMSS, I think, has a very similar philosophy. Also been in business for several decades. Mark's been there for some of that, as have I. I've been here for 22 years. Mark, maybe you've been there a little bit less than that, but still a good amount of time, right?
Yeah.
And so KMSS does a lot of great audit, tax, business consultancy, advisory work for a whole range of clients as well. So we get to work on some client accounts together, and it's been a great partnership that we hope will continue for years to come. So the topic for tonight's presentation is talking about businesses coming out of COVID. And obviously COVID's had an impact on almost every business. And as we're coming, I wouldn't say to the end of it, but to a more open type of environment, we thought it would be timely to talk about some things that the businesses can do coming out of COVID to maybe help them, and also some maybe a success story or two during the pandemic, which could inspire us. And so with that, Mark, why don't I turn it over to you to introduce yourself a little more than I have and talk about what you're up to on a daily basis.
Sure. So as Jeremy said, my name is Mark Servello, and I'm a partner here at Kenway Max Lusarchuk Stewart. We're an accounting firm in Calgary, and we have an office in Canmore as well. KMSS was formed in 1986 by Bruce Kenway, Ray Mack, Barry Lusarchuk, and Cal Stewart. And for the past 35 years, we've been proud to provide services to clients located mainly in the Calgary area and also in the Bow Valley area. And as Jeremy said, we provide accounting, auditing, and tax services, and a variety of consulting services, which are really dependent upon our clients' needs in various situations. I joined KMSS in 1997, so I've been here for 24 years now, and I joined the tax group in 1999. Since then, I've been focusing on income tax and commodity tax issues. It's always interesting and it's always new because even similar issues can have different results depending on the facts of the particular situation. KMSS is also an independent member firm of DFK International, which is an association comprised of independent accounting firms across the globe. And this association gives us access to global knowledge and resources when we have clients that are moving to another country or expanding their businesses into another country. Currently, there are 229 DFK member firms in over 100 countries. So that, when somebody's moving somewhere, they're thinking about moving, or they're going in business into another country, that gives us an opportunity to reach out to other firms. That's just a quick summary of who we are. Currently, we have 65 people at KMSS, which includes 16 partners.
Great. Well, thanks for that, Mark. And I think much like you folks, being part of a wider network is important. CH Financial is part of the IA Financial Group, based out of Quebec City and Toronto, which is a network of independent advisory firms all across the country. So I think, as I often joke with people, it's as independent as we can be without living in a cabin in the woods off the electricity grid. So you have that network around you, but with some real independent, customized advice for people. Which leads us to my great colleague, Stephanie Murray. Now, Steph, you joined our firm almost a year ago now. Feels like you've been here for longer because you're such an important part of our team. But why don't you introduce yourself a little bit and then we'll take it from there.
Thanks, Jeremy. Yes, it has been coming up on a year now. Time has passed a bit oddly this last year. It's easy to say, how has it been a whole year and how's it only been a year? So like Jeremy said, my name's Stephanie Murray, and I work with him and the other advisors here over at CH Financial. I'm an accountant and business valuator by trade. Over the last 10 years plus, I've helped with individuals and businesses across Alberta with their accounting, tax, financial planning, and other business advisory needs. After I finished up my schooling over in New Brunswick, I originally came to Central Alberta, where I worked with mainly smaller family-owned businesses. Following that, I spent some time in Edmonton before finally settling down in Calgary. I made my way here about 8 years ago now, and I love the city. I've been working downtown the whole time, and I'm falling in love with the community of individuals and business that make up the Calgary downtown area. That's where I'm just really excited to interact with more going forward. So
Well, that's great. Thanks for that, Steph. And again, happy to have you part of the team. Happy to have you on the line too tonight, Mark. So I know it's going to be a good discussion, and the format will basically be you two are going to ask each other questions. I have the pleasure of listening in and chiming in if necessary. But I know you two are both experts in your field. You're great at explaining things. So, Steph, I believe you have the first question for Mark. So why don't you go ahead with that?
That's right, Mark. So this past year has been tough for a lot of businesses. However, I understand that there's been many government grants and programs available and still available. Can you tell me more about these?
Yeah, absolutely. So most of the government assistance programs are still available, although there's some that are coming to an end actually in 1 week here on June 30th. The CEBA, the Canada Emergency Business Account, is scheduled to end on June 30th, as is the HASCAP, which is the Highly Affected Sectors Credit Availability Program, and also the application for the third payment under the Alberta Small and Medium Enterprise Relaunch Grant. That has to be made by June 30th as well. Two of the major programs, though, the CEWS program, the Canada Emergency Wage Subsidy, and the CERS program, the Canada Emergency Rent Subsidy, they're still scheduled to continue up to claim periods ending September 25th, 2021. And the recently introduced Canada Recovery Hiring Program, it's scheduled to go until periods ending on November 20th, 2021. So the CEWS program, it's a wage subsidy program which is available for eligible employers, and the CERS is a rent subsidy program which is available to qualifying renters and property owners. For both of these programs, you have 180 days after the end of a claim period to file a claim for that period. So the next deadline for the claim period from December 20th to January 16th, 2021, a claim for that period must be filed by July 15th, 2021. So if you haven't filed claims, or if you're behind in your claims, you're still looking at the period ending January 16th, and you still have until July 15th to file. And you know, we've been very busy filing these CEWS claims and CERS claims for our clients for many months now. I was just checking our stats the other day, and we've filed over 1,160 CEWS claims and over 140 CERS claims. And the recently introduced Canada Recovery Hiring Program, that's a new hiring subsidy program which provides eligible employers with a subsidy of up to 50% of the incremental remuneration paid to eligible employees. If you'd like more details on these programs as well, on our website, we have a one-pager on these assistance programs, and it includes links to the various programs if you're interested in more information. Our website is kmss.ca. Also, if you have any specific questions, you can reach out to us at any time as well. All of our contact information is on our website.
That's really good information, Mark. I just want to ask you one follow-up on that. I know this is a bit of speculation, but we've been watching these programs, I won't say come and go over the past 16 months, but almost like they come and then there's another one that is introduced and another and another.
Yeah.
Do you think at some point that this might get rolled into the general employment insurance benefit, or like more of a long-standing EI or that type of, or maybe a CPP benefit, as opposed to these sort of ad hoc programs?
Well, for the ones available to businesses, I don't think they will, but the ones for individuals, I don't know for sure, but potentially there could be changes to the EI program in the long term. That's what might happen with some of these programs that, like you said, they come up. There's different programs all the time. There's very many announced, especially early in the pandemic, and a lot of changes to them. So in the long term, quite possibly there could be something that changes the EI program substantially.
Yeah, and one of the things we've talked about on previous podcasts and Zoom calls is you have a whole bunch of people who really used to have very simple tax returns, and as a result of these various benefits have got a lot more complexity than they had previously, and particularly if they went from being self-employed to an employee or back and forth. And so I think all the more reason, to talk to someone like yourself or like us, who can help navigate through that a little bit. And, like Mark's saying with the KMSS website, our site, which is chfinancial.ca, also has a lot of resources there as well, particularly on the financial planning and some on the tax side as well. So this may be a year that people, it might make sense for them to talk more to a professional instead of doing some of these things themselves.
Yeah, absolutely. I agree, Jeremy.
Okay. Great. So I think the next question then, Mark, is yours for Stephanie, I believe.
Yeah. So for Stephanie, how do you think businesses can deal with the changing landscape post-COVID? What advice would you have?
So the pandemic has made a lot of routine jobs that business owners usually do a big challenge. Like managing a business is no exception there. We're used to the marketing economy going ups and downs, like high periods of the year, low periods. Some years are booms and busts. The pandemic's been completely different. This is like a natural disaster which has impacted the entire world. So we're living through something we've never experienced, and this really requires us to employ some new approaches to deal with it and then ultimately recover. For many small businesses, the focus is on the current options. On a day-to-day basis, there's just so much going on that it's hard to give attention to long-term strategy and growth. But having a long-term strategy plan can actually help guide your day-to-day business decisions and ultimately help you thrive and grow. A strategy is kind of like a higher level objective of something that you want to do or achieve, like growth, expansion, new markets, new products. Once a business has identified what they want to do, then they can then create focus goals to help them get there. For example, a focus goal could be something specific, like increase sales of a certain product in 2022 above 2021, or this year, maybe just to eventually reach your pre-pandemic monthly sales. Once that's done, you can really kind of get more granular with day-to-day operating objectives to help you get to that goal. For example, you could plan to release a new product in March or set up this new marketing approach in January. Just as a bit of a case study here, I recently talked to the owners of a small business that operates in the Kensington neighborhood, PB&J YYC. It's a restaurant that specializes in peanut butter sandwiches and related snacks. As a bit of background, my husband and I, we just love peanut butter. When we first heard this restaurant was opening early last year, we were really excited and couldn't wait to try their products.
And you were excited about that, Steph, but I think
super excited.
You made the comment to me at the time, though, that somebody starting a business in the pandemic, this place won't be around for more than 6 months. And lo and behold, not only did they survive, it sounds like they really thrived. And I know you're going to go through some reasons behind that, but it's a really cool success story.
Exactly. They have not only survived but thrived. I've always followed them on social media to see their new product launches, and they posted earlier last month that they had their best sales day ever. So again, this is during the tail end of the pandemic when closure restrictions were still going on. So I really wanted to find out, like, why? What did they do that helped them survive this time and actually improve their sales? So I went to talk to the owners there, and I found out that they didn't just achieve their sales growth accidentally. They didn't just sit there, fingers crossed, hoping that they'd keep making money every day, but rather they implemented specific targeted changes to achieve this growth that they've realized. Simple things like reorganizing the order of items on their menu board, adding new lines of prepackaged candies, introducing daily specials. Their overall strategy was growth, but this was ultimately achieved by setting specific focus goals, like increasing sales on certain product lines, and then implementing specific changes to achieve these objectives on a day-to-day, week-to-week, and month-to-month basis. So this is really something that any business could make use of. Sit down, think of a plan, and then break that down into smaller chunks to find ways to achieve those goals. Anything to add on to that?
That's actually, it's such a good example. One of my favorite examples of that, and another business part of our Downtown Business Association is Buchanan's Restaurant. And if you go to Buchanan's, they basically, most days they have one special, which is salmon. And they change the presentation every day, but the special is salmon. Once in a while they might have another one, but generally that's the special every day. And I was talking to the owners of that one day who we've profiled before and asked them, like, why is that the case? Reason is they get sashimi grade fish, and that fish fluctuates in price all the time. And what they were finding is that if they had one preparation of salmon and it was there for a long time, that would account for a huge percentage of their sales, something like 50 or 60%. And so if the price of salmon starts fluctuating and that's that much of your sales, you can't change the prices of your menu every day. So they would end up actually, there'd be losing days simply based on the price of salmon. So they made it one of 10 or 12 different presentations to reduce the demand for it. But it's an interesting example where until you ask that question to really understand a business itself, why, you'd be curious about that. But since then, the revenues have been quite a bit steadier since they made that change a few years ago.
And again, it's just a simple change. So it's easy to just sit there and hope for increased sales, growth in customer base, things like that. But to actually achieve them, you need to sit down, have a plan, and then think of a focused number of steps to get there, which is just often a matter of implementing little changes like that.
Yeah, no, and it's neat. Like right down the street from us on 4th Avenue, we have the Street Eatery, another great downtown business, and they did really well throughout the pandemic because they just have such a following on Skip the Dishes and Uber Eats. Parking is fairly easy right in front of it, so there's this constant line of people going in and out. Always interesting specials. They're really active on social media, and I think like that's certainly a component that us more traditional firms have really had to adjust to over the years. I know KMSS has done that as well, where we are a lot more active on social media, and I think we all really enjoy it. Once you get used to it, it becomes really enjoyable, and it's a great way to not only hear what your clients and customers are looking for, but to really interact with them as well.
Oh yeah, the interaction is incredible.
Yeah. Great. Well, that's really good information. So Steph, I think the next question is yours for Mark.
It is. So Mark, my question for you, with businesses seeing significant swings in their revenue and income over this last year and now this year as well, what really can or should businesses consider in terms of their current taxes and tax planning going forward?
Well, I think one thing with their current taxes, and this is kind of always should be doing, business should always be trying to file their corporate tax returns and their business returns and their GST returns on a timely basis by the filing deadline. Even if you're expecting that you'd had losses in the year, it's still best to file on a timely basis. And in fact, if you did incur losses in the most recent year, you may want to file sooner rather than later, because non-capital losses can be carried back up to 3 years to recover tax paid in those years. So that's an incentive to try and get your returns filed, even if you're in a loss situation.
Yeah, that's great to know.
The other thing, ensure that you're reviewing your installment requirements, so you're paying the required amount of installments, not more or less than the required. The rules for the current year installment requirements for corporations take into account the corporation's installment base for the immediately preceding year and the second preceding year. But if your business is in a position where it had higher tax payable in one of those preceding years than it's expected in the current year, there's an option to make installments based on estimated tax payable for the current year. Now, I think that if you want to use the estimated tax payable method, it's likely best to ask your accountant to prepare a tax estimate for you for the current year. And then just keep in mind, if you do make installments based on estimated tax payable, the corporation's actual tax payable, if it ends up being more than the estimated amount, then that you'd be subject to interest and penalties on those installment shortfalls. So there's some risk there, but still, if you could be paying a lot more installments than is required if you're looking at a down year this year compared to a prior year.
And that's true. Great point, Mark. And that's also true on the personal side as well. We had one of our clients this year, brand new client who's a doctor, and about 90% of his income basically is paid on a monthly basis with no withholding tax on that. But his income does fluctuate. And so there were a couple of years where he paid a huge amount of installments and got a lot of that back. And of course, a big part of your job and our job is to make that as smooth for a client as possible, or as easily predictable, because that's something that a lot of clients struggle with, just to conceptualize that. And again, a good reason to talk to a professional who can even prepare a simple tax estimate to make these payments a little more predictable for you, and maybe even potentially lower, as you're saying.
Yeah, absolutely. Because you know, in the end, if you do pay too much installments, you'll get it back when you file, but it's a cash flow item, right? You're paying when you don't have to, and then waiting to get the money back from CRA. That's not the best situation.
Yeah, and all the while getting paid 0% interest on that too. So, you know, like even bank interest these days is at least a fraction of a percent, but in CRA's case, it is 0%. So,
the other thing I was going to bring up is if your business is in a position where you're looking at expanding or even buying new equipment, the recent federal budget that was released on April 19th, 2021, Finance introduced new rules for accelerating capital cost allowance claims. So any eligible property that's acquired by a CCPC, so it's a Canadian controlled private corporation, which most of the small businesses in Calgary would be, any property that's acquired on or after April 19th, it can be expensed in full under the new rules rather than having a certain percentage being deducted each year. So that's just something to keep in mind. There are some CCA classes that don't fall under the new rules, but those are the excluded classes tend to be ones for property with longer lives, such as building and fences. However, something like leasehold improvements, it does fit into the new rules, so you would get the expense on that immediately.
So that's good to benefit companies, to give them a bit of an extra expense deduction in the year they pay for the expense cost, and then reduce their taxes owing in that year.
Yeah, especially with some companies, of course, you know, in the downtown, which we all have worked in for many years, with people, some companies having more space than they need and having to, you know, perhaps upgrade that space over time. It's a good point that you both raise. Anything else you wanted to add there, Mark? I mean, certainly that was a very good answer, but any other?
Yeah. So as I talked about a little bit earlier, if your business did receive money from one of the government programs, most of those amounts received are going to be considered to be government assistance, and as such, they have to be included in the calculation of your corporation's or your business's taxable income.
Right.
Specifically, the one that's a little bit different is the CEBA loan. The amount of the loan that was forgiven has to be included in income of the business. So that would either be the $10,000 or the $20,000, depending on how much CEBA loan you applied for. And generally, the forgivable portion of the loan has to be included in income in the year the loan was received, although there is an election that can be made to reduce specific expenses in the following taxation year in certain circumstances. So it's just good to keep in mind that is taxable income. And the other thing to keep in mind is, if, with respect to the CEBA loan, if you don't pay it, if it's not repaid by December 31st, 2022, the forgivable portion of the loan will not be forgiven. And that's just a summary of some of the things that you can think about when you've experienced swings in revenue and other items related to some COVID benefits that you received.
Yeah, and I think the you know, the common theme in all this, and not to veer off in the political direction, but I think the governments, and this is a very complicated issue, of course, and ever changing, but I think governments have tended to offer a lot of temporary flexibility and benefits. But it's clear that once businesses are coming out of COVID and many start thriving again, you know, things have to be paid at some point. Yes, there's interest forgiveness, maybe penalty forgiveness as well. But this is definitely a situation where there's flexibility temporarily, but I think longer term, certainly the tax system is not going to go away, and probably not become any easier over time.
Yeah, I would agree with that. It's not going to become any easier over time.
Yeah, exactly. So Mark, I think you had our last question here for Stephanie.
Yeah, so Stephanie, what tips would you give to businesses to help succeed going forward?
So the main tip that I want to bring up is the recommendation to stay close to the numbers. And this actually builds off of Jeremy's story about the Buchanan's restaurant, when they noticed that the margins on their fish varied quite a bit throughout the year. And so they introduced daily specials to kind of control the sales of that product. So that's something, it's an opportunity that's available to businesses that pay attention to their numbers and really know their business. A lot of companies, they see their financials as a compulsory filing thing. Once a year, they run their financial statements, plug them into a tax return, and get their taxes filed. And they generally know how much money is in the bank to cover inventory purchases and payroll. But those that really dive into their data, the margins on certain products, the sales over certain periods on certain product lines or product types, really have an opportunity to increase and maximize their profits and sales by taking advantage of certain trends. Like, for example, going back to the PB&J restaurant, they had noticed that their sales of prepackaged candy in smaller packages below a certain, I think, $10 threshold sold better than the larger packages. So what they did is they increased some new product size lines, taking some of their products and creating smaller packages, a little lower price point. And their sales increased threefold, a 300% increase in sales just from introducing a new product size. Similarly, on the topic of daily specials, they introduced a daily special and quickly found that half of their day's sales were on that special. So by noticing that trend, they were able to essentially plan for their sales and then buy their inventory accordingly. This reduces in less waste, better opportunity to bulk buy, and then again, more opportunity to increase profits in the long term. So this is something that it's not just available to restaurants and retail companies. Really, every business can take advantage of a deep dive into their numbers and an investigation into opportunities. And really, this is something that accountants and financial advisors can help with, because not everyone can easily pick out what metrics, numbers, or sales figures might be most relevant to keep an eye on or to watch. So we can help look at the numbers and identify some key targets to just watch from day to day or month to month.
Those are great points, Stephanie. And I think that's why it's important too to keep current on your financial information, just to keep it up to date so you always have current numbers.
And it's good as well, I think, to have that not only a second set of eyes, but somebody to provide some realistic advice to the firm. Like in my case, being president and CEO of our company, I'm always popping into Stephanie's office with, something that I've dreamed up about. Maybe we can do this, maybe we can expand into that. What about this or that? And I think she's generally supportive, and much like KMSS, this is a growing firm. We have an awesome client base, and are always keen to take on more clients. But Stephanie really adds that dose of realism to say, well, we can't do exactly everything you want. We can probably do a lot of that, and let's look at a plan for how to do that. And I think a lot of entrepreneurs, and listen, my background is not as an entrepreneur, strangely enough. I don't come from an entrepreneurial family, but I landed in the great city of Calgary in 1998. And nature took its course, so to speak. And this is such an entrepreneurial and amazing city and province. That's what has really driven this province from inception. But I think the downside of entrepreneurs, sometimes we get a little bit ahead of ourselves, and it's nice to have my team, and also including KMSS and a lot of the work that we're doing to really provide that caring, guiding hand to the entrepreneur. And I think, Mark, you enjoy working with those type of clients. Stephanie, I know you do as well.
Yeah, absolutely. Most of our clients are entrepreneurial type clients, and absolutely we enjoy working with those clients.
Yeah, and it's nice to when people are growing and building something, it's cool to be a part of that. As that sounding board or a provider of advice, and as I say, we're always keen to interact with more good friends. We meet great people all the time, and are happy to do so. So before I give some final thoughts, Stephanie or Mark, did you have any last words?
Just to build on to what you just said, it's been a rough year in Calgary this last year, but with that roughness comes a lot of opportunity. This city is going to grow and develop leaps and bounds over the next several years. Tons of new companies are going to come here, and I'm really excited to take part in the growth within that.
Great. Mark, how about you?
Yeah, I agree. I think one of the best things about being in public practice is having the opportunity to see your clients grow and succeed and help them with that. And it's just exciting. So I agree with those comments.
Yeah, and if not, we wouldn't stay in this business as long as we've done, right? I think it's we all came into this business in different ways, but we're still really passionate about it. And I will mention again, KMSS has a great website. I know there's a blog there that you guys update on a regular basis, and that's kmss.ca, Mark?
Yeah, that's right.
And then we're chfinancial.ca. Again, the two firms work together very closely. As Mark mentioned, we also have a lot of other affiliates around the country and around the world. So there's a good network there as well. We're also all active on social media, as I mentioned earlier. And not just for business things, we like to post some fun things too, because without fun, life would be boring. It's not always just about the numbers. So we really try to have a balance of some fun content and some some real business content as well. So check us out on social media, both CH Financial and KMSS. So thanks to both of you for joining me tonight, and we'll look forward to speaking with you again.
Thank you. Have
Thank
a great
you.
day.
Okay, good night.
Have a great evening.
Yeah, you as well.